All right. Hello, everybody. This is just another quick market update. Again, not financial advice. This is just how I'm looking at the market. What an interesting night I missed last night. Um, there's some weird stuff going on. I'll start with the Nasdaq, um, or just the general markets, and then we'll get to Bitcoin. It's just a quick one. I'm at home on the laptop, so sorry for any quality issues. Um, Basically, we still haven't got along above the long-term volume averages. One thing you'll notice here is we're getting a separation between um, the S&P 500 and the market liquidity. So it's like federal bank liquidity basically being injected into the market. So that's dropping off. S&P is still going up. Typically, when the liquidity starts dropping off is when it can be a precursor to the overall markets dropping because there's just not as much sort of money out there, or being pumped into the system at least. So this is an interesting disparity here, with a, a strong jobs number, and the market just seemed to be all over the place yesterday. Just going to go into like 15-minute chart and just get rid of. Oh, no, that should be right. So pretty much straight after the open, I think that was that was the opening 15-minute candle, um, I believe. Anyway, looked like it was going up, sucked everyone in, and this was a very short time frame move. Like everyone obviously would have seen the report come out. The market's gone straight up and then just dumped straight off that. And you got to watch that. The quick moves are normally a false move when you're dealing with news. Not all the time, but quite a high portion of the time. And that was super quick. I mean, you had to get down to the 1 minute chart, I think, to actually. Even then, look at that. That's majority of that move happened in the first minute after that thing came out. So good luck trading that. Um, Quite often it's best to just not trade the actual news and then come in after it. Because as you can see, there was actually, oh, sorry, we're up here, pretty reasonable recovery of that whole candle and wick during the session after that. So markets obviously interpreted it in some weird way after the fact. Um, Generally, the job openings were strong, but unemployment levels rose a little bit. So it's kind of offsetting things. It's not necessarily going to allow the Fed to cut rates, and that's why you'll actually see um, that rates have gone up quite a bit. So this is the market basically, like the bonds have gone up on the assumption that the Fed's actually not going to be able to cut rates for a bit. Typically, bonds should be about 6 months out, projecting 6 months out. So they're not expecting as many rate cuts now as what they were. Um, so that's effectively what it's come down to, I think, overnight is, you know, they think that means the economy's strong overall, and hence it was fairly well break even on the markets overall once it's fully digested. But Jesus, there's some that's a horrible day to try and be trading unless you're trading on the 1 minute chart, and even then, a lot of people got slapped last night. A lot of the Bybit traders that I'm copy trading have actually they were up like 25-30% in a couple of weeks, and they've actually gone into the negative now. So they'll recover, but that's just a day where you've got to be really careful where you're trading. Um, so, I mean, SPY is basically the same. Um, the equal weight is down on the day though. So again, it's probably a better indicator for me as to what's going on. IWM's down a bit. So obviously IWM's smaller companies, more susceptible to rates, higher rates, because most of them have debt, or more debt than the big 500. So they do tend to get slapped around a bit more with higher rates. The weird thing for me is the XLY XLP is actually up on the day. Go figure, because that is typically a sign of, you know, the strength in the economy. Could just be a retest of this moving average here, and we might end up heading back down. But that surprised me a bit because it has actually been trending down against the S&P moving up. So could just be a blip in the system. So this is still really suggesting that there is a little bit more downside to go. The Dixie jumped on the news that obviously rates, or on the assumption that rates aren't really going to be reduced anytime soon. That's strong for the dollar, and I think that is a little part of why Bitcoin has dropped. Strong dollar tends to make it a little bit harder for Bitcoin to move, but I think Bitcoin was just didn't have the volumes flowing into it that it needed. We'll get to that in a second though. So VIX is super low. VIX is still really low. Yeah. TLT's dropped. Bonds have dropped, which is interesting. So bonds are still struggling to break out of this zone. If bonds keep going down and the stock market keeps going sideways, then it will probably be a coil and a bit of distribution, and you'll see it drop eventually. But trying to predict when that is going to be tricky. High yields dropping as well. The only thing, skew didn't really drop off again. It's pretty low though. So when you're looking at this, the fact that the stock market has stayed high and has sort of kept going up even as the skews dropped, that is a warning sign that there is further downside to come. Copper is also a warning that there's further downside to come. Copper doesn't, or it's commonly referred to as Dr. Copper because it gives you the health of the market, and that is a pretty big drop on the day. So this is what I'm saying. There's lots of mixed signals. Like the overall economy seems like it's dropping, but the stock market is holding up at the moment, um, despite reducing liquidity and things like that. So that was uranium. Gold's dropped as well. That is interesting. Fairly key level for it here with that Gaussian channel, I would think. But yeah, well, it's probably going to find a bit of support here, I would think. at that level. If we break below this, then I would be expecting this area here to be the next stop, which will probably coincide with that 200 EMA on the daily. Again, this is suggesting that most companies are actually have gone down today, but S&P 500 and Nasdaq have stayed flat. So it's the big guys that are holding things up at the moment. Even Nvidia's down slightly, but in general, the rest of the big guns were actually fairly flat still. Okay, so we'll just check BTC longs. It's staying fairly flat here, actually. That's interesting. The fact that it's down as Bitcoin's dropped, I would have expected that to actually increase as people take long positions as it drops. That might be just a net from people getting liquidated, longs being liquidated. But surprised there isn't more movement on that. And let's go into BTC. So this was the level we talked about yesterday where I was going to be particularly interested in. So looks like we actually got down to the, I think that's the 20 EMA there, or 13, I can't remember. But obviously it's an EMA that's been a bit of moving support recently. So it's bounced directly off that level. We went straight through. I'll just try and find, where's my, go to one without all the other crap on it. So we went straight through these levels here that, like that wick there, typically Bitcoin doesn't leave a wick like that without at least retesting it. But we just went straight through everything. That's a waterfall sort of, must have been a lot of long liquidations, particularly around this point and for that candle there. But that seems to be like there would have been a lot of people, a lot of market makers and big guys buying within that candle as well. Someone's got to be the buyer in that situation. And yeah, we obviously found some support around this level here. Where did it get to? 68. It was low 68, 68, 336 on Bybit. So yeah, we've tidied up that little wick. And we've actually come back down into this level here. So pretty good liquidity run. Doesn't surprise me that we've sort of bounced back up here a little bit. Obviously there's a lot of resistance overhead now, so this wouldn't be a bad thing. Like, we've recovered a lot of the liquidity that would have been trapped from the last run up from sort of these levels. So given we've sort of bounced off those EMAs and things, it's pretty critical that we hold this level. If we do drop again and slip below these levels here, then I would expect quite a bit more downside, just because well, for one, you'd probably end up at least at the middle of this Bollinger Band here, which 66,600, and that would be a concerning level for me. I think it would actually, it'll probably hold up there, but this market, with what it's looking like in the overall stock market, we could actually be testing the bottom of this Bollinger Band here, which will be really interesting because if we look at, I need my chart with, so if we turn on the Pi cycle indicator, it would mean, like, if we get below this 65-ish level, it means we're going to be below this lower band on the pi cycle indicator, and typically that is never a good thing. And even breaking below the mid band of the Gaussian channel typically suggests you're at least going to visit the bottom of the Gaussian channel as well. So yeah, that's it's going to be an interesting market. I think I'm still not seeing any real interest in crypto apart from the people that are already in it. And I think that needs to change for us to really start to take off. And like the last bull run after COVID was kicked off by the fact that there was a lot of spare cash in the market and people just started throwing it into crypto. And the Fed was just pumping money out. So we don't have that at the moment. And that sort of concerns me. I think this is going to be more like previous markets where we go sideways and bid up and down for the next few months until the bull run actually kicks off. But you know, again, this is a critical level. This is what I'm watching for the macro side of it. And part of my portfolio, I do macro. Part of it, I do short term. For the longer term stuff, I mean, I averaged in down around these levels, but this isn't a point where I'm particularly interested in selling or buying, to be honest. Um, I'd rather actually see a proper breakout, but you know, at the same time, it's not. There does seem to be a lot of demand. There was a lot of inflows into the ETFs in the last couple of days as well, but that can change in a heartbeat as well. Like now that Wall Street's involved, and the big guys are involved, they will take profits. They won't necessarily hodl as much as what we would. If they see 5% profit, they're going to take it. Uh, it's a completely different mentality to normal crypto, and that's why I think this whole cycle could actually be completely different to what we've seen before. I mean, it already is. The pump up before the halving and stuff, we haven't seen anything like this. Hitting new all-time highs before the halving, it hasn't happened before. So I think we're in a different ball game. I think it's just going to be trading key levels and um, just being really quite careful, a lot of dollar cost averaging in until we see an actual decent run. I'm actually hoping the stock market crashes and the Fed steps in to prop it up because that would actually trigger, I think, another bull run in crypto. So keep on the lookout for that. Yeah, most of the altcoins have been absolutely hammered um, overnight, which isn't a bad thing. I might actually look at some levels to pick up some of them for the long term. This is the only other thing I was going to go over today. So this is the total crypto market cap, and it's kind of one of the things in the back of my mind is that we're not seeing any extra money come into the system. The overall value across the ecosystem isn't changing. So, you know, until we can actually see more money flowing in, I wouldn't be expecting new all-time highs, really. It just wouldn't make sense. And I think if we go to the monthly chart, oops, sorry. Um, so even though Bitcoin has made new all-time highs in this run, the total crypto market cap never did. And so I think, again, it's been sort of affected by the ETFs in a way that means, yeah, we've got Bitcoin pumped and stuff, but we need more interest to come in from the overall economy, and we need more money in the overall economy before we're actually going to break out and really go on a decent run. I just can't see necessarily us having a major breakout yet. Yeah, that's about it, really. So yeah, hopefully that's been useful. Um, as you can see, this global liquidity indicator is very interesting. I think this is going to, if this increases, like if you see the Fed pumping money in the background, something's broken, and that could actually lead to a bull run. But how it affects the market in terms of timing is the tricky one. Like we could actually get a sweep down and then go once the Fed announces that it's pumping all this money in. Yeah, there's some interesting stuff went on last night, and it's confused things. But I think um, in my mind, I'm still not seeing any particular reason for Bitcoin to break out. The other thing was just the there's some interesting reads on the miner net flows. This is saying something different to what it's actually saying here. So I don't. Yeah, that's kind of that little indicator's broken a little bit at the moment, but it's interesting that it seems like the miners have actually now holding on to their Bitcoin. They haven't actually sold it during this dip. So this dip's caused by something else, is what that's suggesting to me. I'm interested to hear if anyone else has any theories on that. Um, yeah, that's about it for today. The general sentiment would be could see a little bit more downside, but if we do sort of grind up, that would be a good thing. But I'm still expecting the markets to have a tough time over the next week or two. And I think that could drag Bitcoin a little bit lower. So yeah, I'm not dollar cost averaging in shorter time frames. I'm looking for decent sort of volume moves. Um, yeah, that would be the summary. Catches